Hey there, I'm Jeremy Drobeck with Treadstone Mortgage, and if you're viewing this video, you're likely a realtor or a seller involved with a transaction that we're working on, and you received a pre-approval letter for one of my buyers that I pre-approved for an FHA loan. And there's a lot of myths and rumors out there about FHAs, and I wanted to just dispel some of those and answer kind of some common questions that I get on FHA financing. So first off, an FHA loan is a government-backed mortgage. It's an extremely popular program out there because it's more lenient on down payment requirements. It's more lenient on credit score requirements. It's gives us the ability to do some things that we can't do with your conventional loan. And in a lot of cases, FHA it straight up gets a bad rap. Some of that is just because lenders don't know how to navigate them. Some agents aren't familiar with how to navigate the different things that come up with FHA. So I just wanted to talk through this with you. And if you have any questions at all, I'm more than happy to talk to you directly about that specific file. So what I'm going to go over isn't necessarily for the buyer whose offer you're looking at. This is just a general video I'm recording, again, to dispel some of the rumors and myths and stuff out there with FHA. Why do buyers pick FHA over conventional? A lot of times it makes more sense, right? So when I do a pre-approval for somebody, we look at all the options. Like we'll look at conventional, we'll look at FHA, RD, VA if they're eligible. And my goal when I'm working with a buyer is to place them in the program that is best for them, the program that meets their needs the best, makes the most financial sense, and all those different things. The reason to opt for an FHA, it doesn't necessarily mean somebody has bad credit, right? Like, yeah, FHA is lenient on credit. Like we can do FHA loans down to 550 credit scores where conventional cuts off at 620. But if you got a buyer, that has say a 640 credit score, in many cases, it's going to be better for them to do FHA, even if they can do conventional. And FHA is going to be an easier underwrite than a conventional would in a lot of cases on a file like that. So it doesn't mean somebody has bad credit. It just means that FHA is the best bet, the best option. Are FHA loans more risky for sellers? No, they're not. The concern comes in with FHA on the appraisal side. And what happens with FHA is, with any file for that matter, is the purchase agreement comes in and then the lender orders the appraisal. And the appraiser goes out to the house and they're there for value. I mean, they're there to determine, an unbiased, a third-party opinion of the value. That's the root of the reason for the appraisal. In the case of any appraisal, if there's major health and safety issues, the appraiser is going to flag it to the lender and put them on notice of it. So if you have a tarp on the roof, water in the basement, boarded up windows, you've got the places down to the studs. I mean, this is all stuff I've seen out there. Like those issues right there are going to come up even on a conventional loan. Like there's no getting around it. They're going to have to be dealt with if the buyer's doing some kind of financing. If you've got, the ceilings crumble in and because the roof was leaking, like the appraiser is going to flag that. So with FHA, the appraisers are a little bit more picky. So again, government-backed loan, some different rules. I've got a list on my website, firstclassmortgageservice.com, that can kind of give you an idea of possible repairs. It's really a matter of opinion, but the most common things I'll see get written up on FHA that don't get written up on conventional, number one, peeling paint, hands down. People think handrails get written up, GFIs get written up. Sometimes that stuff gets written up, but like those aren't automatic requirements. If the appraiser goes up to the second floor of the house and there's a deck off the master bedroom and there's no railing on it, like, yeah, they're going to flag that on FHA because that's a safety issue. Somebody could fall off the deck, because there's no railing. So that kind of stuff will get written up. If you got a normal staircase that doesn't have a handrail on the side of it, they're probably not going to write that up. That's not an automatic requirement with FHA. If you got a set of stairs going down to the basement where there's a big drop off on one side, it's kind of common, and there's no handrail there, they'll probably write that up. So it is possible to get hit with some repairs on FHA that you wouldn't get hit on with conventional. With that said, there's numerous ways to address those repairs, and it's typically not that big of a deal. So a lot of times the seller will take care of it. If it's just a simple handrail or a little bit of peeling paint around a door frame or a window or something, a lot of times the seller will take care of that as part of the deal. Other ways to handle it, we can do a repair escrow where we have the buyer get a bid from a contractor, and then we set money aside and we do the repairs after closing. That repair escrow has to get funded by either the buyer or the seller, and most of the time that can get worked out one way or another. If we've got major stuff, then we have a renovation option that we can talk about. And again, you know, different buyers, different requirements and qualifications and stuff, but generally speaking, most of the time we can do an FHA renovation loan where the buyer gets a bid from a contractor and we finance the repairs in. Give you an extreme example. I did one a little while back that was a meth house. So the people were doing meth out there, the cops raided the house, and then the city condemned it, and then it was foreclosed on. And so the bank, you know, obviously wasn't going to correct any of the issues with the house. We did an FHA renovation loan, got a bid for the meth remediation along with some other repairs, and we financed it all in, and it was all done after closing. So it was a good way to handle that type of scenario, that extreme scenario. So it's mild to wild, but generally speaking, the repairs, like we figure them out, it's not that big of a deal. If you've got questions or concerns, again, you're welcome to hit me up. And we can talk through it. Closing time frame, I would say that an FHA takes no longer to close than a conventional. The caveat to that is, you know, if we've got repairs we got to handle, or maybe it is a little bit tighter file because of the buyer's qualification side, like they can take longer for other reasons, but like same buyer goes for an FHA versus a conventional, like it's not going to take any longer to close. It's the same time frame. Now, sometimes when you're working with some of these banks out there or credit unions, again, this is where FHA gets a bad rap. A lot of these credit unions and banks don't want to mess with FHA. So they sub them out. They have some kind of relationship with some third party that'll do them. And then you're at the whim of the third party. So FHA can get a bad rap, you know, depending on the lender handling the loan, because they're sending it out to a third party and there's more back and forth and stuff like that. Not the case with us. We're underwriting those FHAs in-house. So the really closing time frame wise, an FHA should not take any longer than a conventional loan. Is it a lot riskier for you to accept an FHA offer over a conventional? I would say focus more on what you're going to net and what the best scenario is there and the other terms, and don't get overly hung up on FHA. Now, if you got a tarp on the roof, if you got water in the basement, if you've got a bunch of peeling paint, like we want to make sure we got that we've got a game plan to handle that stuff. I love FHA loans. I do a ton of them. You know, when I look at the statistics last year, you know, I was looking at statistics in the area, in the Kalamazoo market, on who's doing FHA and who's doing conventional and stuff. And like hands down, I was the #1 LO in the county for all production. About half of the loans we did were FHA, about half of them were conventional. And when I look at the other loan officers, top 10, 15 loan officers in the county, everybody else is just doing conventional loans. My point in telling you that is we've got this. We know what we're doing with them. We're super experienced with them. My team's very, very dialed in with it. And we got this thing to the finish line. So if you have questions, give me a call, 269-360-7109. You can look me up online, firstclassmortgageservice.com. Check out the Google reviews on us. Love to work with you on this. Thanks for listening. If you have questions, holler at me. I'm Jeremy Drolbeck, Treadstone Mortgage.